Welcome to the Friday Five with Steve Greenfield on CBT News.
Welcome to our last Friday Five of 2021. For this special year-end episode, we're going to recap the top 10 auto tech deals of 2021. This is Steve Greenfield from Automotive Ventures, and thanks for joining us. Well, it's been an interesting year. We experienced record highs in the stock market, record levels of investment and M&A, a record number of IPOs fueled by the Special Purpose Acquisition Company or SPAC phenomenon, and the highest company valuations on record, including both software companies as well as the valuations of physical dealership locations, which also experienced the largest number of deals done in any calendar year. Well, what a year. And with that, I want to take the opportunity to highlight the top 10 largest and or most important auto tech deals of the year, at least the top 10 from my perspective. So with no further ado, let's get started. Let's start off at number one with a segment that generated the largest IPO of the year, with EV automaker Rivian delivering an eye-popping IPO value of $78 billion at launch, which quickly ran up to more than $100 billion in value its first day, outstripping any other OEM's value other than Toyota and Tesla. Also this year, we saw a number of other EV automakers take the opportunity to go public, including Lucid and REE. Second up this year was a lot of action in the B2B auction category. We had ACV Auctions' successful IPO as it climbed 25% in its trading debut after its investors raised $414 million in an IPO priced above a marketed range, providing a total market value to the company of $4.8 billion. ACV then got bonus points this year for their acquisition of Max Digital, a pioneer in automotive data and merchandising products, and best known for its flagship inventory management system platform, First Look. That transaction was valued at $60 million. Then in August, CarGlobal announced they were acquiring CARWAVE for $450 million. With the back-to-back acquisitions of first Backlot Cars late last year for $425 million, and then CARWAVE, CarGlobal signaled to the market that they're all in on online sales and willing to take on ACV and all others in the digital realm. Finally, in the physical auction space, we saw two significant transactions involving Accelerate Group. First up, we saw Accelerate sell to private equity group Brightstar Capital Partners for an undisclosed amount. And then, more recently in December, Accelerate announced the acquisition of America's Auto Auction Group. Terms of that transaction were not disclosed. After the combination, Accelerate and America's will have a total of 39 auction sites across 19 states, as well as growing digital and mobile auction businesses and related financing. In our third spot this year, globally we saw an incredible interest in online used car retailers. This year saw a multi-billion-dollar IPO of Europe's Auto1 Group and the UK's Cazoo. Closer to home, we saw Canada's Clutch raise multiple rounds of funding, including a $100 million Canadian Series B round from D1 Capital Partners. And we saw Latin America's Kavak raise $485 million at a $4 billion valuation. In fourth slot this year, we saw a monster funding round in the dealership software space as TEKION, a cloud-based automotive software provider, more than tripled its valuation to $3.5 billion after raising $250 million from investors including Durable Capital Partners and Alkian Capital Management. Hyundai and existing investors Advent International and Index Ventures also participated in that round. TEKION plans to add larger automotive vehicles such as RVs and boats to its platform. It is set to expand both domestically and internationally, beginning with France by the second quarter of 2022, followed by the UK and Germany. TEKION is taking on big industry players Reynolds and Reynolds and CDK Global in the dealer management system category, which generates about $2 billion per year currently. TEKION's approach is to modernize the approach to enterprise software for both OEMs and dealerships, which has caught the attention of big-name investors and propelled them to a very, very high valuation. Coming in at number 5 on our list, the damage detection space was red hot this year. At the very beginning of the year, Cox Automotive announced they were acquiring Fusion for an undisclosed price. Just a couple of months later, CarGlobal led a $15 million investment into damage detection company Raven.ai. Later in the year, we saw UVI raise a $60 million Series C round led by CARMAX. And then finally, Tractable also raised a $60 million round, a Series D, from Insight Partners and Georgian Partners at an over $1 billion valuation. Accurately representing a vehicle's cosmetic and mechanical condition is key to enabling online B2B vehicle transactions. In addition, companies like Tractable have made a tremendous amount of progress integrating their solution into the insurance industry to diagnose the severity of damage after the vehicle is in an accident. In our sixth slot this year, and continuing in the insurance space, we have CCC Intelligent Solutions IPO at about $7 billion. CCC announced plans for important new solutions that will support the property and casualty insurance economy's ongoing digital transformation and vision to achieve straight-through processing. CCC plans to fully digitize the estimating process for a portion of repairable claims. Their new solution is designed to employ advanced AI, insurer-driven rules, and CCC's vast network connections, and is expected to help customers realize automated estimating in mere minutes and elevate the customer experience. They additionally have plans to incorporate advanced AI into its collision repair platform to apply machine learning to pre-populate estimates based on photos of vehicle damage and configurations by repair facilities to accelerate the repair process. At number 7 this year, we have AEYE, a LiDAR startup that developed its technology for use in autonomous vehicles, as well as to support advanced driver assistance systems in passenger cars, which IPO'd earlier this year through a merger with CF Finance Acquisition Corp. 3, valuing this company at about $2 billion. AEYE is one of several LiDAR companies that have expanded its focus beyond autonomous vehicles. AEYE's pitch is that the company's LiDAR technology, along with its partnerships with Tier 1 and Tier 2 suppliers like Continental, makes it well positioned to scale and to be adopted by major automakers. AEYE's LiDAR sensor scans the surroundings and then, with help from its perception software, identifies and focuses on relevant objects. Coming in at number 8, we have the consumer vehicle insurance space, which was on fire this year as well, with a number of significant deals. First up, Dealer Policy, the automotive insurance marketplace, announced its $110 million Series C investment, led by Goldman Sachs, after raising $30 million in February this year. The company's pre-money valuation was $450 million. On average, Dealer Policy saves consumers $64 per month on automotive insurance. Automotive dealerships report, on average, 44% higher gross margins in their F&I departments because of increased customer budgets from their insurance savings. The news comes on the back of sales channel strategic alliances with JM&A Group and Darwin Automotive, which should greatly accelerate Dealer Policy's growth. Second, in the insurance space, CDK Global announced that they would acquire Salty. Deal terms for this deal were not disclosed. Salty provides a convenient mobile-first solution that helps consumers secure the insurance they need for their vehicle seamlessly without leaving the car buying experience. Historically, many dealerships set up their own in-house insurance agencies with mixed results. Salty and their competitor, Dealer Policy, have figured out a different way to enable dealers to introduce vehicle insurance into the car buying process. Consumers can cross-shop insurance providers, save on their monthly premiums, which then can be rolled into either a more expensive vehicle or allow the dealer to attach more F&I products to the deal. The consumer wins and the dealer wins. And finally, in the insurance space, Lemonade is bolstering its nascent auto insurance business by acquiring pay-per-mile insurer Metromile in its first acquisition. The deal values Metromile, which went public via a merger with a blank check company earlier this year, at roughly $500 million. SoftBank Group backed Lemonade, which went public last year, recently debuted an auto insurance product called Lemonade Car, currently being sold in Illinois, with plans to roll out to the offering to other states. Buying Metromile helps Lemonade build up that business while giving it auto claims data and a team that's worked in the business for a decade. Investors, however, did not fare as well with Metromile. Metromile is being sold for a fraction of its $1.3 billion equity value that it had in its earlier merger with a SPAC. Coming in at number 9 on our list, AUTONOMO, the cloud-based software startup that helps companies capture and monetize connected car data, headed into the public market with a SPAC IPO. The Israeli-based startup agreed to merge with special purpose acquisition company Software Acquisition Group 2 with a valuation of $1.4 billion. AUTONOMO launched in 2015 with a cloud-based software platform that can capture and anonymize vehicle data, which can then be used to create apps to provide services such as electric vehicle management, mapping, subscription-based services, parking, usage-based insurance, traffic management, media, and emergency services. The company's platform is used by 16 automakers, fleets, and more than 100 service providers. Currently, the platform ingests more than 4 billion data points per day from over 40 million global connected vehicles. Coming in at number 10, CARMAX acquired the remainder of EDMUNDS, up from their previous $50 million minority stake. The total enterprise value of the transaction was reported to be $404 million. EDMUNDS had revenue of $140 million in 2020. CarMax, the largest used vehicle retailer in the US, worked with EDMUNDS to develop an online instant offer tool for sellers of used autos. CarMax will leverage EDMUNDS' strong traffic with 16 million visits per month to reduce the cost of acquisition. CarMax spends about $191 million per year on marketing versus Carvana at about $286 million, referring to 2020 numbers. And finally, I'm going to cheat and insert a bonus category because this is my show, and it was the year of big exits in the digital retailing space as the big strategic players made their bets. Examples included Prodigy selling to Upstart for about $100 million, Gubagoo selling to Reynolds & Reynolds for an undisclosed amount, Roadster selling to CDK for about $360 million, and Darwin selling to JD Power for an undisclosed amount. The digital retailing landscape has become very competitive with many standalone solutions. Large players like Cox and Cars.com made their bets long ago. The whole segment has been buoyed through COVID. Every dealer needed a solution to sell vehicles online, and the Carvana effect has also provided dealers a sense of urgency to get in the game. So there you have it. That's your annual wrap-up version of the Friday 5. I hope you appreciated the recap of the year's biggest and most important auto tech deals, at least from my perspective. Thank you for tuning in to CBT News for this year's Recap Friday 5, and we'll see you in the new year.
Thanks for joining us for another edition of the Friday 5.